What's going on, dividend chasers? Dividend Bloodhound here with another investing episode. This episode we're going to talk about NIO stock or NIO stock, and is it a buy right now, and can you join the bullish attitude that is going on in this stock at the moment with its recent 19% increase in share price over the last few days or so. The share price has been on a remarkable run, having started off at $6 a share at the end of July to the $17 a share that it is now. It is doing particularly well, and people are jumping on board now, realising the potential of EV producers, electric vehicle producers. If this video does bring you some value, it would be absolutely great if you could hit the like button in the corner there. And if you're brand new to the channel, it would be fantastic if you could subscribe and even tick the notification bell as well. If you want to know the rest of my opinion on this, you'll have to stick around for the rest of the video and jump back in after the intro. Catch you on the other side. Hey again guys, welcome back into the video. So the recent uptick has been caused by a couple of different things really. As with all things, it is inherently linked to the Tesla share price. EV producers sort of band together, so there is that element, but also there has been a couple of announcements on the company's part as well. They've announced they intend to expand into the European market in the next year or so in 2021. At the moment they are exclusively Chinese based, despite being listed in the US stock market. They are exclusively marketing their vehicles and selling their vehicles in China, but that is due to change shortly. And a bear analyst, or he wasn't a complete bear, he didn't absolutely hate the stock, but he's now upgraded his view on the stock based on the performance in their most recent quarter, and has actually upgraded their price points by a whopping 1,500%, which has caused the spike that we have seen at the moment. Obviously it started off at a $6 share price, so 1,500% of that really isn't a massive deal. It's not going to turn into a $500 share price overnight, but it is a sizable increase, and that has started to increase the share price as investors have started to sit up and take notice. I actually have a friend within NIO, within the company, and he says that the company is doing so well at the moment. There is so much interest around their cars, and this is largely because everybody, even the legislation in our country at the moment here in the UK, wants to switch towards fully electric vehicles by 2040. Everybody's interested in who's going to supply those vehicles. He has said that year on year and quarter by quarter and sales target after sales target is being absolutely smashed out the park at the moment. They just keep beating and tripling their sales each quarter. Only this quarter they actually quadrupled it. It caused the initial announcement in the quarter actually caused a minor sell-off in the share price, but this has now been recovered because investors didn't think that the revenue was enough for what they had actually achieved. But then when we delved in deeper into it, we actually found that the sales had gone up fourfold instead of threefold, and their actual profit margin on each vehicle had gone from being negative 24% to positive 10%, which is actually a huge increase. It actually means the vehicles that they're making are now profitable, and that's a really good indicator going forward. Is the company a buy? This is a difficult question to answer because a lot of its growth has already happened, at least in the short term. But I do believe that people are starting to come on board now. Investors are starting to come on board. If we look at the explosive growth of Tesla over the last few years, that is just somewhere where you could see the company going. I do understand that the Tesla lovers among us will quickly say that NIO is just a car manufacturer. Tesla does a lot of other things to the side. That being said, that is a really good point, but at the moment Tesla sales or vehicle sales make up the large part of their revenue, so there is no need to back down in terms of thinking that NIO could achieve those sort of sales and that sort of revenue as well. Even if you completely park all the other EV side of things, there is no reason to think that they couldn't achieve significant revenue as well. The company is also trying something new called battery change at service. So you pay a subscription cost for the battery in your vehicle, and then you can go to a charging point and you can swap the battery of the vehicle out and instead of sitting and waiting for an hour for a recharge, you can just have the brand new one straight away, plug that in, and you go on your merry way. So it's just a swap and change sort of a service. Now this is a subscription charge that NIO will charge you for as an extra payment on top of paying for the car. But in terms of how much you pay, the initial cost of the vehicle for you will be a lot less, because you will pay for the battery essentially over time. So if you need a loan for the vehicle, let's say, you'll pay a loan for the vehicle itself, and then you'll pay that loan payment against that. Then you'll also pay a subscription service for the use of the battery and to swap the battery out whenever you need to, so you can get a new one in and get to your destination quicker. It's like an instant fuel stop basically, no need to wait around. Not even Tesla does that at the moment. It's a really interesting concept. Will it work or not? It's probably too early to say, but I really do like the thinking and being out the geniusness, essentially the innovation or the innovative nature of this. It's a different way of doing things, and it's kind of a USP, a unique selling point for the company going forward. And if they're going to break into the European market and the US market, that is something they're going to have to bring to the table, because Tesla over in the United States has got that pretty well locked down at the moment. So going forward then, the bullish case for this company is that globally, we are all going to be switching to electronic vehicles over the next decade or so, maybe a little bit longer, but the shift is happening now and it's starting to gather pace. So there's going to be loads and loads of customers out there looking for EV electronic vehicles that they can use, and that might be cheaper than Tesla, or offer something different to what Tesla has to offer, or the traditional car making manufacturers. And this company, set up the way it is now, is already ideally placed to take advantage of that. They already have an excellent customer base. Being based in China at the moment, they've got an extremely populous country to sell their cars to. Not only that, China's middle class is expanding at a ferocious rate, and that is exactly who these cars are targeted at, and that market is ever expanding with the amount of people that could potentially afford these vehicles just in China, let alone if they manage to expand properly into Europe, as I've already mentioned, and then going on from there to the rest of the world, the United States, Africa. I know there's probably affordability issues there, but the same with South America. There will be people in these countries that can afford these vehicles. As I've already mentioned, this company is reporting quarter on quarter, year on year increases to revenue and sales, and delivering those actual sales to the customer. This is tripling each time, and in the last quarter it actually quadrupled, as I already said, and they've actually started to turn a profit now on each vehicle that they sell, which now means that they can get that money reinvested to boost production even more and expand the horizons more and more, exactly like Tesla has been doing. So the bear case then is a little bit more interesting, to be fair. The EV market is starting to fill up now with so many other competitors. So yes, you've got the big one that is Tesla, obviously, and this company aims to follow in their footsteps. But at the same time, what you've got to remember is that all the big car giant heavyweights are now getting on board as well. So your Ford, your General Motors, Mercedes, BMW, Volkswagen, all of these companies are now producing their own competitor vehicles, and some of them have very loyal customers, and it's going to be hard for NIO to break into this market and prize people away from their Teslas and their Mercedes-Benz or their Jaguar or whatever. It's going to be very difficult for this company to penetrate the market. And also, some people just don't trust China. It's that simple. People at the moment, especially with the health crisis, have got a real issue with China and the Chinese government essentially taking advantage of what's going on. Like, they don't trust the Chinese build quality, they don't trust what's going on in the country, and that will serve as a real barrier to people either investing in this stock or buying a car, and that is something to consider going forward. I personally am invested in this company, not by much, because I've got a share as a free share. I was fortunate enough to get this company as a free share, which I'm absolutely extremely thankful for. If you do want a free share with Freetrade, do hit me up in the comments below and I can sort you out a free share straight away up to £200, and who knows, maybe you could get a share in this company. And then I had a little bit of spare cash in that account, which I don't actually use my own money to invest with, so it's just what I've got spare in there from other free shares. I actually had some spare money and I bought another one just before the price decided to leap as much as it has, and I plan on keeping these for the long term. I can't afford any additions at the moment, and I don't feel like adding it in either my dividend portfolio because it doesn't quite suit that, or my growth portfolio on Trading 212 either. The last issue I have is that the company might not even be able to break into the US market at all because of the ongoing trade issues between the US and China. This could be a really big sticking point whether they actually allow sales of the car in the country at all, especially with Tesla doing so well and wanting to export its vehicles and make its vehicles all over the world. I tend to think that a Trump administration potentially would maybe seek to try and limit the company's NIO's actions in the country, so it doesn't detract too much from Tesla, as Tesla is doing so well. That's just my own thoughts. There is no evidence of that at the moment apart from the ongoing trade issues that you can see, but it's just something to think about in the longer term going forward. I'm now going to take you into the app so we can have a quick look at the company's loose fundamentals, so we can actually see how it's done over the last few days or so and over the longer term. Then we can actually see what its market capitalisation is and how much further it has potentially got to go, and whether you can consider investing in this one, and is it a buy already, and should you get on the train essentially. I'll catch you in there. Hey again guys, so here we are in the app, currently staring at the $17.85 share price of NIO, and it has been on an absolutely excellent run over the last quarter. Started the quarter down at $3.98 a share in May, which is absolutely incredible, and then over the last month it's gone from $11 to $17, and then over the last week $14 to $17. Absolutely incredible return on your money. So is it time to join the gravy train that is this stock? And there is a compelling argument for it, to be fair. The fundamentals aren't really there right now. They've improved, but they're not really there. If we have a look at what Trading 212 has got to offer here, we've got a market cap of 21 billion, a PE ratio of unknown at the moment, a revenue only of 1.1 billion. But then it sort of contradicts this by saying there's a revenue down here by income statement annually of 7.82 billion and a net income of minus 11.42 billion, meaning they've got a really bad profit margin at the moment, which is to be expected for such a fledgling company. But what we are looking at is the future potential of this company. Again, their assets and debt to assets aren't so great either, but neither is Tesla's, to be fair. And this company is all about its future potential. As we've said, they've gone from not making a profit on their vehicles, which is what caused this figure here and the loss that they had, to actually making a profit on their vehicles. So in the next year or so, especially when they expand into Europe, I would expect to see that starting to get closer and closer towards making a profit and paying off the debt that they have. But this is the thing that you pay with the share price being so cheap now. Now is the time to get in and then watch it sail up to a couple of $100 a share potentially, as it turns from a heavily loss-making while it's in its developmental phase to a profitable company. It's all about the future at the end of the day. I mean, Tesla has reached the ridiculous market cap that it's got through its sheer growth figures alone. It's not actually that much of a profitable company at the moment. That being said, I'm going to wrap things up here and I'll catch you back outside in the real world for a verdict. My final answer on this stock sounds like Who Wants to Be a Millionaire. Didn't mean it that way. is that it is really up to you and your risk appetite. I'm never going to tell you to invest or not to invest, only what I'm doing personally. I have 2 shares in the company, and a lot of you will go, well, whoop-de-doo, that's just 2 shares. The fact that I've kept them when I got one as a free share and then I spent some of my own money on a second one really speaks volumes about this company. I've got a couple of ETFs that I usually dispose of free share money into because it's just something nice and easy, and I could just offload the shares, sell them, offload them, and just put them into an ETF and just leave them there and watch them grow slowly over time. But with this company, I've actually backed it and kept the 1 share and then added to it as well. I'm just going to sit on it come what may, even if it goes all the way back down to $4 a share. I do believe in the long-term potential of this company. In the future, we're all going to be driving electric cars, and I believe that this company, NIO, whatever you want to call it, is ideally placed to take advantage of that, even if it fails to break into the United States, and even if in Europe it only just competes with and doesn't dominate the market, it still will get a significant slice, I do believe. Even if Tesla's there as well and all the other car marketers are there, I do think it will still achieve some sort of presence in Europe. It's still got its own Chinese market, and it's still going to get pushed along by the Chinese government and get help that way, and it's got the most populous market to do it to and one of the biggest middle classes in the world. So I'm going to keep hold of the share, and I do feel that if I get a free share again and it does represent enough value that I can buy another share by selling that one, I will be hard pushed and torn not to do that, to go up to 3 shares in this company, because that is just the sort of faith that I have in this company right now. That's just my opinion, of course. You need to do your own research and you need to have the risk appetite. As I mentioned earlier on in the video, it is still in its early days. It's still in some significant debt. It does have some liquidity, but it is in significant debt, and it's only just started turning a profit margin on its vehicles, but that hasn't transpired into a quarterly profit yet. So you really do need to think about that before you start parting with your hard-earned cash. That being said, I'm going to wrap things up for this episode here. It's been an absolute pleasure. I love doing this, guys. If this video has brought you some value, it'd be absolutely great if you could hit that like button. It does mean a lot to me and the channel. And do consider subscribing and ticking the notification bell if you haven't already. And that wraps me up there. So I will see you in another investing episode. Catch you later.